Hey guys, Mike here. So I know your time is valuable. That's why I like to keep my videos usually 10 minutes under. I try my best, not these 20, 25-minute videos a lot of people would do. And so I'm going to go over some data today that, is some of it's good, right? So, okay, this is where we're at, okay? And some of it is concerning, and it's really talking about us, the consumer, right? Because we're what drives the economy, we drive the market, all that stuff. And so, if you look at right now where we're at here in the stock market crash, correction, whatever you want to call it, in bear market, then you can see this right here is peak to trough declines in historical bear markets, declines of 20% without a 20% rally, all right, since 1929. And you can see where we're at right there. Drew the line over for you. You can see, I mean, if we started recovering now and going up, it'd be the fastest ever without that happening. But you can see a lot of them, it dropped way down. And you can see a lot of them are very well drawn out, right? And so we either very early on in this thing got a lot farther to go, or a very, big rally coming up of 20% and then another massive drop. So a lot of stuff can happen. And this takes us into real average weekly wages fixed for inflation. And you can see because of the inflation, you can see real wages have been declining since 2021. And if you look at it and draw a line from there over to 2020, we're right back to where we were because of inflation making money, but taking out inflation, we're obviously making more money, which is what is really concerning the Fed because that's sticky, right? Wages are very sticky. And so that means these companies are having to raise their products and services prices to offset those extra wages. Unless they're going to lay everybody off at once they hired in 2021, then they're stuck with people making a lot more money. And when you look at another good thing, home prices, right, have soared. That's not a good thing that it goes up this fast because it sets us up for a big fall. But a lot of people have a lot of equity, and you might be one of them, in their home as a backstop in case they need it in case of an emergency, which we haven't had. I mean, it's at a record level right now. We've never seen this much equity for this many people in their homes. And something like 90% of people's mortgages currently are below the current mortgage rate, which is a good thing. And by the way, if you get anything out of this, please hit that like and subscribe button for me. I really appreciate it. Think about sharing the video. As always, guys, thank you for all your support. And this leads us into some concerning things, right? So we got all that as a backstop. But what really concerns me is, and I saw this the other day come out, so I wanted to show it to you, because we all think that, wow, these stimulus checks came out and all this other stuff, the stimulus came out, like it really went to the bottom, like say 10% or 20% of the country or something like that, right? But that's just not true. I've read so many reports, saying that's not true. Yeah, they got the stimulus checks, but the majority of the stimulus, where'd it go to?
Most of the money went to the business owners, suppliers, and banks, and not to the rank and file workers. In fact, the study looked at incomes of business owners and bank execs and found that 72% of the PPP money was captured by households with incomes in the top 20%.
And of course, the stimulus checks, which we talk about, child tax credits, people that didn't need them, that were just fine, had their jobs, making, 200, 250,000, maybe even more, still got stimulus checks as well, right? And where theirs go? Most likely in the savings into the stock market, right? And so if you look at what they're talking about here, look at what the average, because they said the top 20% of wage earners, right, get this stuff. Well, here's some stuff for you that came out this year. The average personal income in the U.S. is $63,000. Median income is $44,000. The average annual real wage is $67,000 in 2020. The average U.S. household income is $87,000. The median household income is around $62,000. That's household, not just any individual. And then if you look, the top 20% right there, that's $150,000 to over $200,000. That's 20%. So you got to be making over $150,000 to be in that. Okay. Everybody else, 80% of the country, maybe a little more, the households make $150,000 or less. And that leads me to one of my favorite memes of all time. And it's like, it's fine, even when this stuff's happening to us. And I don't know if you noticed, but car repos are exploding. I've actually seen a video on this, by the way. If you want it, let me know. And I was really surprised by this, but it makes sense once you read about it because of all the free money everybody was getting. And when we scroll down, you'll see why. Because most loans on recently repossessed cars originated during 2020 and 2021 whereas origination dates are normally scattered because people fall in hard times at different times. Loan-to-value ratios, or the amount of finance relative to the value of the vehicle, are around 140% versus a more normal 80%, and many of the loans were extended to buyers who had temporary pops in income during the pandemic. And again, I saw a video on this. It was last week. If you want the link to it, just let me know, hit me in the comments, give me an email, whatever. And this guy's in this business, and I think he was in Vegas, California, somewhere, and he went around because he has friends in the business that just repo cars and then put them up at auction and stuff like that. And he went around to just lots where you can see, as far as I can see, really, that are repossessing these cars that are going to go up for sale in these auctions, and then how these companies are buying just hundreds and hundreds of acres of land to expand their repo lots, okay? And they got the barbed wire fences and all that stuff up so people don't come in and steal the car back. And my uncle's in this business, and he actually owns a used car lot, multiple car lots actually. And so, it's happening. I guess I didn't really think much about it, but I guess it shouldn't surprise me because a lot of these people wouldn't have the money to buy these cars. And again, I got another video on that coming out. And, what else has happened, which you got to look at here, is the rents. I mean, look at these rents right here. Skyrocketed back in 2020, 2021. And on top of that, they're still going up. And there was a landlord survey just done where they plan on increasing for the next 12 months around 10% on rent still. So they are not going to be coming down anytime soon. And then if you look at, U.S. monthly rent national average, I mean, look at this. This is all you need. I got this from Charlie Bilalo, I think is how you say his name. He does a great job on these charts. And just look at that. I mean, that's June 2022 right there. Still going, showing no sign. I mean, if that was a stock, you be in it. Because look at that momentum. You say, yep, trend is your friend, right? And that does not have a good trend for us. And then look right here, the U.S. average new home sales price per capita disposable income. And look at what you see right here. I mean, this thing looks like a meme chart for guys. So you can't even see it. It's so high, but that's where it is, right there where the arrow's at. Look at that. I don't think we've never seen anything like it before. That is insane. All right, and so if you look right, I draw that line. I mean, it busted right through that, And so if the trend's your friend, man, that's an uptrend, isn't it? I mean, have you ever seen anything like that besides on GameStop or AMC or maybe a cryptocurrency? And so when I look at all that, how strong is the consumer? I'm talking the majority, not the minority, the majority. When you got housing has never been more expensive when you compare it to income, ever. And you can tell by that chart. Rents never been more expensive. And look at where they're going. I know some people that do rental property, they say, yeah, we're going to continue to increase as long as they can. They're going to try to squeeze what is it saying? You can't get blood out of a turnip or something. They're going to try, right? And, you look at, if you got cars getting repossessed, what's next? We already know consumers are running up credit card debt. And then how much of that stimulus money is in savings accounts of households that make below $150,000? I don't know. I haven't found anybody with that answer because we all know they report and they go, savings have never been higher. There's $2 trillion in savings in these bank accounts. Suppose the banks are reporting that. You do get that like 8 people in the United States right now, their wealth is worth as much as, I think it's, 160 million people right now. And so if they're taking every bank account, every savings account into consideration, it only takes a handful of rich folks to skew the numbers, right? That don't mean that regular folks have a lot in savings. They could have the people that are making $250,000 or more with just way more savings than they've ever had. That's why they call it the biggest wealth shift in history just took place in 2020. It wasn't because it wealth shifted down to the bottom. It wealth shifted up to the top. That's why you see it's taking less people now to have the same wealth as half the population in the United States now. Back 10 years ago, it was like 190. Now it's like 8, right? And you know their names. So, so that's what I'm kind of figuring out, like, wait a minute. I know people are making more money when you take out inflation than they used to. But then again, the companies are just raising prices on everybody. So that's taking more money out of the consumers' pockets anyway. On top of, do they actually have the savings? Is it the people that we're talking about that make up like 70% of consumers have those savings? And that's just what I want to know. I don't know the answer. I'm just putting it out there to you. What do you think? If your household makes less than $150,000, do you have a lot in savings or not? That's the question. And I'm talking about your family members, your friends, and the real deal is, if you know how to manage your money, I think the answer is yes to that. If you don't know how to manage your money, and we all know people like this, the answer is definitely no, and they have a whole lot of debt they're racking up. And they might be one of those ones getting their car repossessed because they had no business buying it anyway back in 2020 and 2021. Okay, and don't forget, obviously, the cars they bought in 2020, especially 2021, were really expensive, like way more expensive than if you'd have bought in 2019. And so, that's just stuff I'm just curious about, just wondering, trying to create a conversation, a debate, whatever it is you want to call it. So, putting that out there to you. Let me know what you think in the comments. Hit the like, subscribe button if you got anything out of it. I really appreciate it, guys, all that support and love. And I will see you tomorrow.